Good morning, Jags. This is Fahad. Today is Friday, January 29th. Let's get started. Want to discuss this one stock, first time ever, and going to give you a high-level preview here. And I'm sure I will return to this name multiple times going forward from here, not only in conversations, but potentially official trade ideas in the future. Once the option market has listed options in this one, as well as we'll have multiple discussions about this. It's a very interesting and a very high growth small cap that recently came to the market. The stock is called ONDS Holding, symbol ONDS, ONDS Holding. Now, this is approximately $350 million small cap that was listed in the market in early December. ONDS network provides wireless connectivity solutions enabling mission-critical industrial internet applications and services. They refer to these applications as the mission-critical Internet of Things. As you know, that all of you are familiar with IoT, Internet of Things. They call these applications that the company makes as the mission-critical Internet of Things. The company's wireless networking products are applicable to a wide range of mission-critical IoT applications, which are most often located at the very edge of large industrial networks. These applications require secure, real-time, fast connectivity with ability to process large amounts of data at the edge and in real time when it's needed. And these applications are required in all of the major critical infrastructure markets, such as rail, electric grids, drones, oil and gas, public safety and government, where secure, reliable, and fast operational decisions are required in order to improve efficiency and ensure a high degree of safety and security. Now, to give you one example of what this infrastructure will look like, for example, consider the North American freight rail operators. If they're seeking to deploy, if the rail operators are seeking to deploy new on locomotive IoT technologies along with the track in order to reliably enhance their safety and improve efficiency and profitability of their train operations, these rail operators currently basically rely on legacy communication systems like simple thing as like walkie-talkie, essentially the old legacy communication systems that are utilizing serial-based narrowband wireless technologies for voice and data communication systems. And these legacy systems have basically very limited data capacity, and they're unable to support the adoption of new intelligent train control and management systems. And so therefore it presents a significant amount of data capacity challenges for these rail operators. And so this is where a company like this, ONDS Holding, basically comes into play. And they would basically offer their platform, which would offer vast and often remotely located rail track and very extended infrastructure, and particularly, especially actually in the United States, they are already offering this to the rail operators nationwide, covering 140,000 miles. These rail operators naturally require the next generation of robust broadband system with significantly increased data throughput capacity. And as a result, a transition to a computing communication system, wireless computing communication systems can enable the rail operators to drive more intelligence of their operating environments, enabling real-time automation and better uses, more information, better data for decision making, and all of this. So put it differently, think of any kind of warehouse or oil and gas company, an industrial, or anything, a rail operator, an airline company. We're talking about the small closed infrastructure systems, the pockets of infrastructure systems that are inside these companies that connect processes and people together with a high-speed real-time communication network. And that's what this company provides. It has carved out a niche category for itself with a very strong, robust growth. For example, consider this. For the year ended, or for the 9 months ended, I should say September 30th, 2020, which is the last summary from its S1 filing that is available to us, the company had revenues of $1.9 million. But that's an increase from only $313,000 from the 9 months in the prior year. If you're going to go by percentage increase, that's an increase of over 400% year over year. And the projections are limited over here at this particular point because we have not seen any kind of initiation notes on this stock from the street yet. And I'm sure that in the next couple of weeks, we're going to get some. But the kind of growth rate and the kind of market that it serves, the total addressable market size is so significant just in transportation system alone that this could eventually become a couple $100 million in annual revenue for them, which means that the multiple will continue to expand and the market cap will not stay at around $350 million that it is currently. So one to watch, it's only a $12 stock, no options available on this one right now. The stock has been rather very strong ever since the IPO, and I believe this thing is going to be a winner in the long term. So for now, add this to your watch list, watch it carefully, and then in the future we'll come back to this once we have far more research to cover and give you much deeper view on exactly what the projections of these companies will look like in the short term and the long term. And that's it from me. Let's go to Jay.
Morning, everyone. So a couple updates today on two stocks. Stock number one, Century Casinos, ticker CNTY. This was a recent write-up in Weekend Research on November 8th, and I also shared that same note on the homepage that weekend. So we brought this up in conversations on December 23rd after positive Colorado sports betting data came out, and that correlated to the recent Amendment 77 that passed in that state. Now, last night, a new update, the company filed an 8K where they announced that it is in preliminary discussions with Poland's state-run gambling operator regarding a potential sale of its assets in Poland. Stifel was out with a note saying that they believe Century Casinos' Poland exposure has historically been a meaningful overhang to the company's multiple. Poland's market-wide 50% gaming tax rate is among the highest across all US and international gaming markets, while the government there also prohibits marketing gaming activities to customers outside of casinos. So as such, they believe a potential Poland exit would likely be a positive catalyst and unlock value in the stock. Now, they have not executed fully on the sale yet, but if and when they do, they expect the proceeds to be reallocated towards M&A efforts in the United States, and this was something that we did mention in the original write-up. So just a quick update on that one.
Good. Let's see how quickly that catalyst materializes. Seems like it could be significant for boosting the liquidity in the balance sheet as well. Mm-hmm. Chart is also decent, gradual higher highs and higher lows, and potentially it's a play on reopening theme, which I believe it's going to come back. So while I'm going to pull something on the sidelines while we go to the next stock that you also have to discuss, I believe, right?
Yes.
Generac. All right.
That's correct. GNRC. This name needs no introduction. In conversations alone, we've covered it numerous times. One time was on December 22nd, sort of hinting at a potential home healthcare catalyst that might play out, might not, but something to keep an eye on. Then on January 8th, we brought it back up and said there's a new California mandate requiring a minimum 72 hours of backup power at all cell tower locations in that state. And that's expected to be implemented this year throughout 2023. So another revenue opportunity for the company. Now today, I'm bringing it up because KeyBank was out with two notes this week. The first note was when they said that according to their key outage data, A continuation of what was already a historically active hurricane season resulted in 15 million power outages in the quarter, and that was a 50% increase versus the prior year and the second highest quarterly total since 2018. They said outages this quarter were concentrated around three sizable events: Hurricane Delta, Hurricane Zeta, and a public safety power shutoff event in California. And the second note that they had was where they said, based on channel conversations and a combination of meaningful storms and persisting stay-at-home restrictions, sustained robust demand for its residential standby generators, with orders trending 2.5 times from the prior year. And the final thing is that they did note that Generac did have some supply chain constraints coupled with strong underlying demand, so it did push lead out times about 4 to 5 months. But the company is working on a new residential dedicated facility, which is going to expand capacity by 50%. They just need to close on this deal, but not sure when that's going to happen, but something to keep an eye on there.
Fantastic. And this has been a beautiful, beautiful trending chart for all of us. We have discussed this so many times over the past entire year or so, and from so many different angles as to how it has benefited, sometimes with the bull case related to hurricanes, sometimes with
solar,
the solar
and
and the
California
nursing
mandate coming
homes.
up. So yeah.
California, and now the nursing home. By the way, I'm still waiting for any kind of further incremental update on the nursing home side. So I think it's a big driver there. And recently the chart has pulled back from high of 287 to 252 currently. This is a major line of support here at 240, give or take a few dollars. And so this provides a setup for a potential bounce back from here with a nice hard stop right below, let's call it $238. However, the MACD and the RSI are coming down sharply and the market is acting a little bit weak. So one could wait for a couple more days, let it form a base, and then potential setup over there for a bounce back when it reports earnings in the second week of February.
Yep.
And so one to watch. Now, going back to CNTY, Century Casino, and this doesn't just only apply to this particular stock. It applies to a whole bunch of other reopening stock. Some of you may remember that back on January 19th, right over here in conversations that morning, I discussed that if you watch this video, the 7-day moving average of COVID hospitalization trends have finally started to roll over for the first time in 5 months. At some point, I expect this improvement to result in green shoots in travel, retail, consumer discretionary. This was a out of the box thinking, and I was basically making a call this day on January 19 that, as terrible or not terrible, as out of consensus and as crazy as it may sound at that time, we had seen the peak in COVID crisis. And from this point on, COVID will only go down. Interestingly, that was one day before Biden took the oath too, so just how it happens to work out. But I just wanted to quickly provide the update since that discussion. Here is that chart now, the updated chart of COVID hospitalization and 7-day moving average of cases per day. It was right over here, near the absolute perfect. I think I may have missed it by 1 day or something when I mentioned that in the conversation. Take a look at the dramatic decline in the number of cases per day, 7-day moving average, and the hospitalization across the country as well. The vaccine is working. The vaccine is working. The vaccine is doing its trick, and these numbers are coming down, and I think they will continue to come down. We're going to see the U.S. new cases per day come all the way down to 100,000 or even less. Same thing is going to happen with the hospitalization. And at some point, this will result in reopening. At some point, this will result in governors coming out in a lot of the blue states and saying, open things up. We're fine. Vaccines are out. It's abundantly available. Cases have fallen sharply. Death rate has fallen sharply. Hospitalization has fallen sharply. It's time to open every single thing up. That does play it's positively for a name like this, CNTY. That plays positively for a whole bunch of travel stocks, from restaurants to hotels, casinos, airlines, all kinds of things. And I mentioned previously too that as many as 25% of the US population will likely be vaccinated by the end of March, by the end of first quarter. And so this is something to watch. By the way, Johnson & Johnson also is now out with its vaccine data this morning. So that's another incrementally positive data that just came out. Anyways, just wanted to connect the dots there because we forget about the COVID picture, but that picture does have an impact on sentiment on names like Century Casinos. All right, with that said, let's go to Chronicle.
Morning. Today I want to talk about a company called AudioEye, ticker AEYE. To be clear, I do not have a position yet, but I'm looking to get long if it retraces a bit to lower to around $22, especially given how the market's behaving recently. Otherwise, the other possibility is I could also get long on a breakout, so we'll see. Now, this is sort of a turnaround story in the making because this used to be a pretty troubled company, partly due to financing concerns as well as some reporting issues, which ultimately resulted in the company having to restate their financials. Something like over 95% of their revenue had to be restated. But the good news is that the people who were responsible for that are no longer with the company today. And financially, they are now in a much stronger position than they used to be. I shared a couple of charts regarding their financials here. So revenues have also been accelerating sharply in recent years. EPS is continuing to improve, and they've been reporting positive gross profit for several consecutive years now, following all of their previous troubles. And then on top of that, the insiders of this company are currently owning more than 50% of the shares. And the CEO is apparently only paying himself $1 in salary. So everything considered, this is basically ticking a lot of the right boxes that I'm looking for in a fundamentally driven long idea. And then one last thing I want to mention before I start getting into what the company does is that they're not going to report until late March. So there's still a lot of time between now and earnings. All right, so what does this company do? Basically, they are a software as a service provider of solutions for making websites to be more accessible for people with disabilities in compliance with government, as well as what's known as WCAG accessibility standards, which cater for people who have issues with their eyesight or their hearing, or maybe they need to rely on external devices to browse a website, and other related things to that. Now, one of the major obstacles when it comes to companies trying to insource and implement this by themselves is that they can run into a lot of potential legal problems because many of them are not exactly experts when it comes to adhering to certain guidelines and standards that have been set. So these days, they would rather turn to companies like AudioEye to do all of this revamping for them. And one of the key things which help to differentiate this company from its competition is that they are the only providers. They are the only providers out there of what's known as Section 508 compliance solutions against potential lawsuits related to WCAG 2.1 standards, which could come in handy if the Democrats start to move forward with policies regarding disability. That would obviously be a free option to the upside there. And then the last thing I'll mention here is that this company is currently the market leader in all of this. And in addition to their turnkey offerings, they also have integrated solutions with some of the larger e-commerce and marketing platforms out there like Shopify, BigCommerce, even HubSpot and Wix. And even though AudioEye does have competition, as far as I know, this is the only company that's listed. In other words, this stock is really the only way to get exposure publicly, which is why it does command a bit of a premium valuation. Although I wouldn't say that it's overly expensive if we are looking at forward sales over the next 12 months instead of current sales.
Very interesting. I know that both you and Jay had been keeping an eye on this one for a while. So first time we are bringing this up to now clients' attention. I was not much familiar with this one, but I have seen some research on this park every now and then. Only $245 million company. For the first 9 months of 2020 through September 30th, this company saw its revenues increase from 7.2 million to 14.9 million, essentially more than doubling. That's over 100% growth rate year over year. And naturally, this particular chart that you have showing the projections and how we are seeing dramatic increase in earnings projections and such is speaking to that trend that we saw last year. The stock has also been very, very strong technically speaking, with a powerful higher highs and higher lows trend, consolidating for the last month or so in a tight range. While the MACD and the RSI levels have corrected, I would expect at some point a breakout through this and then another new leg higher in these momentum indicators, the RSI and the MACD levels. So very strong trend, a small cap, high growth name growing over 100% year over year. I think you guys are onto something over here. I'll be adding this to my watch list today and we'll be monitoring it closely. May worth the position at some point, and we'll see. All right, great stuff, guys. Thank you very much for joining. Have a great week and all, and we'll see you on Monday.